Bam. All right. So I'm so sorry about the delays. I was having some technical difficulties earlier regarding microphones and headset. It just came down to how I was set up in terms of what's it called? The game bar settings on Windows. It was getting the wrong input output for the microphone, but whatever. It's all done and good now, right? So welcome back, everybody. So today is Thursday, June 26, 2025, and pretty uh, dead day in terms of news, except for the 8:30. We had a red folder on employment claims. We have final GDP numbers. Everything else is kind of like low, low news. We did see a market open. I thought that because we had this dealing range from this high to this low right here, look at the red one. It was matching perfectly with the 50% of this parent dealing range. That would have been a nice way to accumulate more longs using those sell side liquidity. See that? So accumulating, expanding. Didn't quite reach the external range liquidity of this daily range, but that's okay because there was no cracking correlation in forming that low. Looking at the US 500 compared it to the US 100, I'm using this as once again like a way to deal with the live market conditions since the TradingView free plan doesn't really include live market data when it comes to the futures market. So I'm using kind of like the CFDs to help me navigate real-time price action while using the futures contract to get my markets up. And we'll see that in the we're actually re, regarding we're actually referring, excuse me, to this future breaker up. So I'm anticipating this to be used as support for price to use it to expand higher to still meet that um, you know take profit target, whatever you call it, drawing liquidity up here. Okay. So I'm still looking for reasons to be along. Yesterday, I left a live stream saying that we'll be going up higher prices from there. But let's see, here it was like around 10 o'clock, but it didn't. Instead, it kept going down lower. It actually ended up reaching to London highs, the London highs right here, which was kind of like nice because that's what I was predicting for, anyways, if it was going to go down. But it's sad to see that not that the trades weren't fruitful yesterday. Uh, but again, I'm still feeling bullish. I'm still feeling that we're gonna be aiming to these buy side liquidity pull up here. In the form of sellers or breakout artists. Alright, anyways, now we're here. And we just keep going down lower. We're now attacking the parent dealing range. It's yellow. And where did I get that dealing range from? I got that dealing range from this low to this high. See that? So if I go back to my CFDs, low to high. Everything seems to be in tandem. Yeah. So I'm not seeing any cracking correlation just yet. So price could actually still be going lower. If that's the case, let's see here. So you see that we're creating a dealing range low. We made a new low to be here, and then I anticipate it retracing to 75%, or in this case, 25% up. Using that as a sell entry, go down lower, like something like that. Your stop loss would be 40 handles. And then, oh, not 40. And then what would be a reasonable place? Well, you can target London Asia lows, or you can target PM lows from yesterday. Okay? And then that will take us what to where? Equilibrium of this dealing range. And where am I getting this dealing range? The black one. This parent dealing range. I'm getting it from a higher time frame. Where are you? Where are you? Where are you? Okay, this low. Keep an eye on this low. Go up here, higher time frame. Doesn't quite help you out very good. Okay, I see. It's the AM lows. from Tuesday. But where? Where am I getting those lows? Here. Let me just verify. Oh no, hold up. I'm so silly. Referring to these lows right here. So this, I'm using this as a parent daily range from here to up here, equilibrium somewhere down here. So if that's the case, price can continue to keep going down lower, reaching to equilibrium down here. And I'm pairing it up with sell side liquidity in the form of PM session lows from yesterday. So let's see. And because this is a trade that's timed, maybe we could be seeing price, what's it called? Up to what time am I willing to hold this idea for? This will be good up until Thursday at 1 p.m. To reach down there. It's quite a long time to hold, but you know, rules are rules. Interesting. Hang on, guys. Something interesting is happening here. High, low, low, high. See that? That's SMT right there. 1.5, 1.6. Okay. We have reduced the time risk. I'm attaching this idea of going down, creating a new low, retracing to 75%, keep selling short to this idea. So this idea ends until 10 a.m. Okay, but now we're seeing SMT here, which is interesting. See that? High, low, low, high. Let's see here. So we have conflicting ideas now. Right now, we're seeing reasons for price to move up and for price to move down. So when that happens, just hold and wait. That means that there's low probability conditions right now. Smile and wave in the meantime. Q. Should be 9:40, right? Yeah, it's already 9:40. Yeah, I started this live stream a little late because I was dealing with these freaking issues. Let's take a look at the opening range gap that we're dealing with today, this morning. So still have this gap, and then we got a premium opening, close. All right, so then we have 70% likelihood that we'll touch the concept of encouragement. We're doing that here. Where is that first percentage fair value? Okay, not here, not here. This is the first percentage first value right here. It's printing shorts. Look at that, Civi. It's weak because price is just wicking into it. We're not really closing in there. Okay, but we still have conflicting ideas here, so let's take a look at the higher time frame again. We have, where are you, buddy? All right, this is our dealing range from this high to this low, 84 handles. So we're in good conditions for low resistance liquidity runs, meaning that price will be reacting up quickly and we didn't want to stay in a certain spot for too long. Well, according to that. Okay, it's going to be looking at something here. How's your day going, by the way? Fellow viewer, hope your day is going pretty good. Oh, I wanted to check and see something if I'm live here. Okay, yes. So I am live. Whoops. Alright, so looking for price to go lower after creating a new low by having this dealing range with no SMT. So once you create a lower, retrace back 0.25%, sell down short. We would have aligned that with the first percent fair value, kept going down lower. How low are we aiming for? How much lower? This equilibrium of this dealing range in particular. The good trades are always the best when I'm not involved in, right? It's crazy. To be willing to let it go. Okay, we got first presented. City. Oops. Okay, what else? What else do we see here? In terms of the electronic trading, we're about to meet the highs of the opening range gap for the day for the regular. Excuse me, for the electronic trading hours. Something I noticed too was that when I was making the measurements this morning, we had the pre-market session. See this? The range from the opening range from 7 to 7:30. Look at how nicely we projected just 1.5 standard deviations, created that high. And don't take my word for it, but whenever it projects like that, usually means it's measuring the Judas swing of the session. So it's quite interesting. Just have it to have it create that high that aligns perfectly with the 1.5 standard deviation of the opening range of the pre-market, which is from 7 to 7:30 in the morning. That's kind of like how I've been seeing it lately. So if this is going to be the Judas swing, what does this mean? This is not the real move. So the real move should be going sending price lower. Of course, now we have a new opening range, which is 9:30, and look what we're making here. Big range. It's quite interesting. This short would have been nice so far, but I'm still feeling like the best trades right now are to go long. We're just getting ourselves into discount, and we're already starting to be at 950 to 1010 macros, so you should see price reach spool, aiming for either an inefficiency or buy side. Let's take a look at a higher time frame perspective. This is in a sense turtle soup as well, because I had that little time frame aligned to something. Oh, where were you? There you go. That 15U. As long as we take it, which we did. This is MQ. This is, yeah. We're not exactly treating this as support for now, are we? We still haven't crossed the mean threshold just yet. Let's align this with a gap of some sort. Let's see here. It's the new day. Okay, that's the 12 a.m. Yep. I just realized this is a good long. Why is this a good long? Because not only is it a dealing range low, but it's also aligned with a session liquidity. It's kind of like how I like to tie things up too. You have London lows, session liquidity low, plus the dealing range low, strong turtle soup. But look at that. See how we have two conflicting ideas? We've tapped the high of the electronic trading hours opening range gap. That's kind of like my own thing. I'm putting my two together. They didn't really teach us that. I'm just going off on a theory. Interesting. So if we tap the dealing range low, have SMT, should we be referring to this low now? Let's see here. So let's go. There goes this short idea. One thing I forgot to include too on my markings is the opening price of the daily, right? Because we have it for the weekly, I believe. This is just for my thing. I'll make sure I include that. Yeah, you see how on Sunday we have it right here. Sunday opening. Oh, wait, I have two Sunday openings. What's this? Oh, no, I don't. Whoops. So we're on Sunday opening. I'll line that unit here. For you, I really want to put you up here too. So AM open. So I have given you three entries so far. One entry going down lower, which is the first percentage fair value gap, going to where? Going to session liquidity, aligned with the dealing range low, That's a buy. And now the third entry would be, well, it closed up to 25% of this dealing range up here. So we're looking for price to retrace down to 25%, hopefully taking us higher or higher prices. See that? Aiming for what? The buy stops that we created for the Judas after the 7 a.m. opening range. Remember those buy stops that we created? That was a Judas swing before. I do believe now they're going to be used as a draw on liquidity. Okay, and we're about to have 10 a.m. start. So I'm going to start referring to the new levels that we have here, starting from 8 a.m. You have a high, low. Okay, high. Okay, let me see here. High, low, lower, high, lower, low. Okay. So what do we have here? And for the 30, we have this will be referred back until 11. Okay. This whole range here is balanced. And then we'll have the 9 to 9:30. No, don't tell me. So we have a low, high, higher, high. Okay, that's good. Look at that. Okay, so now this whole range here is a high. Oh, let's see, we made a new high. We got 22, 346, and a 1, 346.2. So we broke that by a pip, by a pip, by a tick, or by a handle. Not even, yeah, by like a couple of, yeah, by a tick. 0.1 and 0.2 is one tick difference. In an area of SMT, so I'll be referring to this low, since this is the breaker low. And that's where I'm gonna be anchoring my dealing range. It's a shame. I would have really liked for it to come back to 25%, but it didn't. Because why? We have a low resistance liquidity run condition. Ah, see how it's starting to make sense? Oh wow. This is amazing. Very good price action today. I'm just saying that because I'm actually kind of understanding what the heck's going on today, more or less. I just wish there was someone that can like verify, like, yes, this is what we're seeing today. But and the person you gotta trust in these markets is yourself. Can't be referring to anyone else on Twitter or on Telegram. Let me show you something about the dollar today too that I got really I was really proud of. I mean, proud of in the sense that I was able to predict that we're heading down to that level, but not proud enough because this is crazy that things are happening in the world. But for example, we had the target reaching up to 96.962. I still believe we're going to be heading down to that level. You'll see that we just barely tapped it. That's just to entice what? Entice people who are long that like, hey, you know what? This is strong. It's still strong. So it's using this level of support. But I believe it's just a fake out. This is going to come back, head down lower, hit this level. So we have you. Let's see here. Could have also used that as well. The 12 a.m. first percent to get on a long, go higher. If we had set our entries for this low, right? How much of a stop loss would be nice? 40. Aiming for what? Buy side, external range liquidity. 2 RRs, 2 RRs, you know? That's good. This is actually really good. If you're trying to pass like a top step, you're asking for what, 5%? You risk 1% on this kind of trade, done. Well, not done yet. 'Cause you'll be in it right now, but I mean, this is good. Like 2.5 excuse me, 2.25% in a day, done. I mean, you're done for the week, dude. Do it again next week. You got what, 4.5? Yeah, I mean, because one of the rules I think is like you can't even make more than half of what's required, which is kind of such a BS rule. But they're just trying to filter out the people who get lucky ones, quote unquote lucky. So if what's it called? If you get two trades that are like 2.5 RR, so if we get this projection high to low, bring it higher, will there be enough ample room for you to get a 2.5 R trade? Yeah, you don't even need to trade up to the I guess implied consequent encouragement level. You just gotta aim up to here. That's all you need for today, for it to go your way. And it's a healthy stop loss. It's a day trade. Why? Because it's referring to higher time frame levels. This dealing range low. This is good. Now, if this was my trade, I would have definitely start moving up my stop loss to where equilibrium, because we've already been closing up above it. Once we had closed above this 25%, uh, well, that would have been good. Hang on, let me anchor it precisely. Anchor to 25. All right, we'll set our stop loss down to the low here. Cross the 50. Anchor your stop loss up to here, 25%. Cross the 75, which we just did now. Set the stop loss to equilibrium, and you just keep doing that. I think it's a good way to manage your money. I mean, we're also going for a full pull as well, so we're not taking profits along the way, which is kind of like the risky part. So this is kind of like where the mentality shifts between so someone who is in the market to take money out of it and someone who's in the market to pass a proper challenge. And that's the kind of the psychology that I've been trying to juggle with as well. It's like you're juggling two mentalities. If you were trading your own money, you would have been taking money along the way. Certainly, no doubt. If I was trading a real life account, I would have liked to take money where? Up these old highs, this old high, eventually up to this old high as well. You don't need to have a full pool as long as you're making money, right? That's the ideal goal, to just make money out of this career. But with prop firms, they kind of put you in a hot seat where you have to. Well, not you have to, but it's a lot easier if you get full pull trades and you're only in the markets for a couple of days. But the mentality that it takes for you to get into full pull trades, like it's not practical, because if you want to make money out of the market, you gotta be taking partials. But when you're dealing with prop firms, look at that. When you're dealing with prop firms, you kind of, well, I kind of have been just conditioning myself that no, we need full pulls or it is not worth the trade. Like what? And I fear that once I start trading real actual money, that's going to be a hurdle for me to cross, because it's been embedded in me for months that like no, we need to be waiting for full pulls only, full pulls only. You could interpret it as trigger discipline as well, because you're only waiting for the best quality setups. But still, at the same time, it's like, well, if you want to make money in this market, you gotta take profits along the way, because things can happen, anything can happen. Right now, something can happen right now, and the market can just stop you out, gap you out. Anything can happen right now. So the best way to make money is to just take partials. Yep. But with full pulls, it's like, well, if I just manage this trade accordingly, get this 2.5, I'm good for the day. That's it. No need for me to go back anymore. And that's another thing I didn't recognize that I had my issue with until I started, I guess, talking to myself more, journaling, being on the hot seat, aka my chair, and just looking at these charts and just seeing how my mentality changes. Like you'll start seeing that there's someone peeking through your door in your head. Like let's say you're your headspace is a room, and there's demons outside your room, and someone's trying to peek at you, or they're cracking your door. I mean, some of us don't even have doors, right? We just have an open door, open invitations for any kind of emotion to come in. Even when you're trading and you're finally getting some, I guess, getting the hang of it, you start seeing that the issues that keep reoccurring, the demons that keep showing up in your headspace without an invitation. And that's where you're gonna have to come up with protocols or come up with barriers to in order to prevent those emotions from entering unwillingly, no, not involuntarily, and just showing up without an invitation. And that's the issue I had when I first was trading, because I wanted to get on everything. I was someone that wanted to get on that sell, on that buy, and I'm opening up positions, and little did I know it's opening me up to a lot of more risk, because what if all those trades are failures? They're all losers. And on top of that, once you get to the real life stage, you have to pay commissions. So you're losing on all those trades, paying commissions, and you're just creating mental scar tissue. You're losing confidence in yourself that the next trade you take probably won't be a winner. So what's the point? So what's the point? Is what I used to tell myself. And then before I knew it, it was gamblers, gamblers numbness. That's what they coined it, right? I mean, I didn't realize it at first until someone started talking about it and started acknowledging that these are the issues that exist, and this is how you call them out. And now I'm seeing it. Like now, when I feel the urge to do something, I see that I see that demon show up in my head, and I'm just like, whoa, hold up, where did you come from? I gotta kick you out. And it's constant recognition, like it's constant practice for you to acknowledge your emotions, because every day, this is what I mean. Like every day is kind of like a workout. You gotta be working out in the sense that you gotta be active in acknowledging that these emotions exist and that they're out there to get you, to persuade you that whatever it is that they want you to do, it's valid. And you gotta stand up for yourself and say, no, this is not valid. This is against what I believe in. Like, oh, my fault. My computer is falling asleep here. But that's what you have to constantly practice in terms of acknowledging that these emotions exist, constantly acknowledging yourself that, hey, hold up, this doesn't feel right. What's going on over here? Oh, you showed up again. Greed showed up again. Impatience showed up again. Gambler's numbness is manifesting. I gotta put you guys out, because this is gonna affect the way I trade. If I keep opening up more positions, I'm gonna blow this account, or I'm gonna end up owing the broker and commission fees. You know, it's things have consequences, and you have to start getting in the routine of acknowledging when these things manifest in your head. And it takes months. That's why I think that a lot of people just give up, because they don't give it enough time for you to recognize that these things are real, real in your head, between your ears. You know, like I know, it's like, for example, it's like picking up a new habit. Well, if your new habit is to identify uh, certain negative emotions in your head, that takes a lot of practice to start show, especially when no one's teaching you about these things, right? You have to show up, because everyone's headspace is unique, so everyone has a different floor, and when you show up to that floor, you don't know what's going to be waiting for you once you get there. And it comes in the form of habits from our past lives, like how we've been living our lives and managing it. We've already have issues already presented, and we don't even notice it. Like if you're a depressed person, you're already going to show up to your headspace, your training headspace, flooded with depression symptoms. And it's going to be a lot more difficult for you to get into a clear headspace where you got to focus on this. Because this takes a lot of attention, folks. And if your headspace is already flooded with depression symptoms, anxiety symptoms, and even worse, you're adding stimulants on top of that. I'm talking coffee or, like, recreational drugs. You see how it's, in a way, kind of like a cesspool of just substances and things and emotions that No wonder you can't get your hand on the door. You can't get your hand on the control panel because it's literally you're literally at a disadvantage. And when you do these recreational things like coffee, drugs, it's like you're submitting. Uh, you don't want to be in control, and this is why I started drinking less coffee. So I knew that was just an added stimuli that I know I didn't need it. If we were created as the perfect being, you have a brain, you have lungs, you have a heart, you have a conscience. Like you can do this, and that's the kind of positive self talk that you gotta talk yourself into. Like you can do this, man and girl. Like if you have these vital organs, you can think critically, you can think for yourself. You can do this. You don't need external stimuli or people to tell you or market ads to tell you that you need to drink their substance because it's beneficial, because you gotta, you know, it's gonna make you focus a lot more. It's gonna make you less drowsy. It's gonna make you less stressed. All those solutions can be found internal. It's the way you eat, it's what you eat, it's how you talk to yourself, it's how you heal yourself. How actually we're getting a way off topic, and maybe I should probably make a maybe we should have like a real talk about this at some point. But these are the kind of things that I talk to my friends about, or talk to myself about too. But I digress. We're still looking for the external range liquidity to head up here. I know I went on a super tangent. I haven't really been pulling up on my markings. Let's see here. So we have a new high. So we have the A anchor, the B anchor. If it reverses up, right, we create a new high. I would like for price to go back to 75%, expand higher. Same deal. Just want to check my notes here for something. Yep. So once it crosses that A line, we want it to retrace to 75%. What do we see here? Do we see that line with a dealing range? No, we don't. But we did see it trade back to equilibrium. That's interesting. Let's take a look at this low. We have 22,317.1. We have 22,317.5. So it went down 4 ticks. Went down 4 ticks to institutional order flow entry drill. Went up higher. Well, it's going up a little bit higher, but it's being met with a little bit of what? Maybe time distortion? Maybe. Let's see here. I still think we're going to meet those highs. And the truth of the matter is, I think I missed my trade. I think I missed my trade. If it wasn't for this turtle soup down here, the retracement up to 25% would have been nice. Would have been nice. Right? Because step one is finding type 2 daily range. Had it up here. Step two is finding SMT in the form of liquidities or inefficiencies. We had it in the form of a liquidity pool right here. Taking out a dealing range low plus SMT. That was step three. Where are you? Step three, SMT high, low. Well, the US 500 made a low to a high. That's step three. Step four is making the price close above 25%. Check. Number five, entry. Either here or here. And now step six is to, I guess, align it with a type 1. Let's see here. Where can we find our type 1 dealing range? I don't see one just yet. But I like how we're using this. We haven't quite closed above it just yet. So this whole range up here from this low to this high is balanced. So we're just gonna see how price is reacting towards it. Week is 10:18, so that should be starting our mini macro. Times at 9:45. So we have a high low. Excuse me, we have a low high, higher high. Okay, so from this candle, from 10:15 onward, notice how we use that as support. Interesting. Why? Why is it support? Because this is a little mini balanced price range. And we have a low high, higher low. I refer to this to as like a breaker, like a little mini breaker. So from here to here, we're gonna starting from 10:15 onward, this balanced price range will take effect. And the moment we open 10:15, the 10:15 and 1 second maybe made that low. The 10:15 and 2 seconds maybe made that high. That's why I only take the opening price. Okay, order block, inferred order block maybe. But if we're referring to this as the type 2 dealing range in terms of equal highs, relative equal highs, we closed above 25%, right? We didn't quite get to 75, went back down to 25%. So this would have even been like a little super mini, like we're talking like 10 handles reaching up for this. See that? I used to love these kinds of trades, like really quick scalps, and I would get my accounts blown so fast. And with this extra knowledge now about dealing range theory, which you can find on YouTube, um, along with my back testing and the things that I've been discovering about price, it's really it can get precise. And I'm not saying that it's gonna reach up there right now. I mean, if we had this idea planned out, right? How long would I have waited? I would have waited for it to reach until 10:30 for this idea to plan out. Why 10:30? Because I'm comparing every 15 minutes the market structure, for a lack of a better term. So I'm comparing lows and highs between every 15 minutes. So I refer to that as my 15U. So from 9:45 to 10 o'clock, that's 15 minutes. From 10 o'clock to 10:15, that's another 15 minutes. So we're gonna what's it called? We're gonna predict what price is gonna do in the next 15 minutes, which is gonna take us to 10:30. So I'm taking the lows and highs, taking a 110-day formed, and at 10 o'clock we open down here. So I'm taking the opening price. That's kind of like our new cycle, and we're projecting this balance price range forward to 10:30, right? Because that's the end of the second 15-minute range is from 10 to 10:15. So from here to here, I'm gonna leave this open. We're gonna see that once we've exited external range liquidity, boom, break even. Or heck, now that I learned about the dealing range theory, once we had break over the 50%, immediately set to break even. So that would have been a really quick scalp, you know? And this is looking pretty good. Because again, we're also breaking up this higher time frame dealing range. Wick that's high for sure, but it retraced down about 75%. I mean, if we take this height of this low, let's see here, because we made a new high. Notice 75% down low, go up higher. Now, I don't want to chase price right now. If I get into an entry now, I'll definitely be chasing price for sure. Let's take a look at the dollar, use SMT, how things are looking here. And again, there shouldn't be too much manipulation today. Looking into the news, there doesn't seem to be much of what's it called, of a high of a high impact news worthy event. You know what I just remembered? The silver bullet. So let's take a look at the silver bullet starting from 10 a.m. What would have been your silver bullet? I think it's this busy right here. It would have been a nice silver bullet. Okay. Yeah, it was referred to it down here on 10:15. So it wasn't just my balanced price range, but it was busy. That once it was rebalanced, it was made into this low was made into an intermediate low, and this busy would have been seen as like a what's that word called again? Reclaimed busy. Okay, because we had sell side delivery and buy side delivery, so I made it balanced. Traded back down to it, treating it as support along with the BPR. This is considered now a reclaimed busy. So that would have been a silver bullet long, trading up to external range liquidity here. Interesting. So this don't get me twisted. It feels wrong right now. Like man, I should have caught these trades, but you got to forgive yourself, man. You got to be able to forgive yourself and make yourself understandable that you're still learning how to read price. And right now, what you need is confidence. I need confidence in my trades because right now everything looks like a worthy push of a button. Of course, now with experience, I'm able to say like, you know what, I'm not entering today because I'm chasing price. Price has already dipped down into discount multiple times and I missed it. I mean, now in hindsight, it's like, dang, I missed the trade. I used to feel even worse because based on what I was telling you guys yesterday, like if you had missed the trade or if I'm negative on my prop firm challenge account, like I'll just self sabotage and I wouldn't even make my day enjoyable. Now it's like I'm over that, and I think that's a good sign because now it's like, oh, okay, you know what? I'm not gonna let this affect my day. I already know what I missed out on. It's gonna happen again, and moving forward, just be more aware or be more cut up next time. It's fine. All right, but we're aiming for price. Once price heads up to these highs, I'm gonna call it a day. In the meantime, I wanna show you back to the pre-market highs that we made here. So let's go over here. Remember those pre-market highs that we made that matched really well with our projections from the opening range between 7 to 7:30. Yeah, that's this. This was the projected Judas set down lower. Okay, took out the dealing range low along with session liquidity London, and now we're aiming higher. So I'm aiming for these highs to be taken. So that's where I'm getting that high. Okay, up here. And again, why are we long? Because we're trying to get aligned ourselves with a higher time frame perspective that we're gonna price is gonna reach up to this buy side liquidity up here. So that's I'm gonna give it a couple more minutes. The guys being met with some. I mean, I would say this is time distortion, but I don't know. All right, hang on. I'm one moment, guys. One moment. All right. Are you winning, son? Are you winning? So I don't even really remember the terminology for retail. Is this a bull flag? Is this a bull flag? Let me see here. Bullish bull flag. Oops. Let me set my stuff here to here. Uh, let's see here. Maybe it's a bearish bull flag from here to here. Three main flags. All right, flag patterns. Uh, so I'm seeing this pattern forming. So I think they're gonna give it to retail and say, you know what, this is a bullish. I'm sorry, what's it called again? Bullish bull flag? I don't know. I think that's what we're seeing here. Down here to these sides. And for the FTMO, we're doing that here. I'm sorry, not the FTMO, the top step, we're doing it up here. But this would have been a nice 3.8 RR trade. Look at that. Amazing. And now the inferred fair value gap, not, excuse me, the inferred dealing range will be from this low to this high. Okay, so that would have been a nice buy. Where is our measuring gap? I don't think I see it. Oh, I'm gonna take a picture of that. And I think that's it for the live stream, guys. Thanks you all for watching. Uh, that's about to do it today for us. Do you still? Maybe I should stick around just a little bit more. Maybe we could hit this level. So because we have reached all the way up here, I would have already set this trade stop loss up to here, 75%. Okay, once we reached 22,372, then we're good. 22,372. Oh wait, hold up. I think it's already breached. Yeah, look at that. 372 is the high. That's the profit target, right, for our trade. And then the high of this candle is 22,373. So it would have surpassed it already. Would you have gone and filled? To be honest, because brokers are so scummy, I don't think so. I think they would have just been like, oh, it's too quick to reprice. We're not gonna be able to book it. So we'll just give it time. If anything, you could even push the limits and just set this as your break even now, because this is the event horizon between this low to this high. So that's about to do it, everybody. Technically speaking, we have reached both take profit levels. We had the 4-hour trade that was based on our balanced price range theory, as long as the first, excuse me, the silver bullet trade that we had here going on, plus the addition of the breaker of the dealing range here, retracing that down to 75%, using the medium threshold of the balanced price range based on the 60-minute as support to reach prices higher. And then as well as we had the long that was based out of the low of this dealing range right here, low to high, and it was matched along with London session lows. So that's a good at a time that we're bullish, meaning that we're trying to meet price upwards. So nice long up here. Did I get my entry of retracing it back to 25%? No, I would have liked that, but it didn't. It's okay. And then as well as we had the first percentage fair value gap that, based on the pre-market sessions, made a standard deviation up here. So I thought that was the projected Judas for the session. So I thought the opening would be, bullish from the start, but there was no SMT in the beginning. So there was really no dealing range for us to anchor us to until we had made this low, right? We just so happened to touch the dealing range low. But to go back to the first percent fair value, you would have been using this SIBI, and look how many times we worked into it, but we didn't really close. So this was weakness. trade out lower, trade out lower. Nice little sell. I was first aiming for equilibrium, but that's okay. That makes more sense. The fact that I really liked it more that we dipped down to this low and then expanded higher. So yeah, and that's the live stream, everybody. All right, hope you enjoyed it, and let me know what you think. Let me know down in the comments too. Have I been trying to be more active and see where things go? All right, guys. So have a good one. And